You're entering the future-ready CNBC TV18 EBIX Cash Studio.
Welcome back to Halftime Report. Markets are all guns blazing right now, but let's get into our special segment, Quarter Se Quarter Tak. The Q2 earnings season is upon us, and today my colleague Abhishek is standing by to tell us what to expect from the banking space this quarter. Abhishek, over to you.
Well, Sonia, it's going to be a tricky quarter for banks on various parameters. Now, the loan growth has turned positive for year-to-date in September 2021. So, the loan growth for Q2 FY22 was about 6.7% YOY and about 1.1% sequentially. Now, banks will see healthy recoveries and upgrades, from their Q1 numbers in Q2 after the economy has opened up. So, there are resolutions like DHFL which could also aid recoveries for many banks. Slippages may remain on the higher side, not as high as what we have seen earlier, but it may remain elevated. So operationally, Q2 FY22 could be a weak quarter, and earnings would largely be led by lower provisions or lower credit cost. Early business momentum that we have seen from various private banks do show that private banks have gained on CASA ratio, that is the low cost deposit ratio, advances and deposits also they have gained over their PSU counterparts. So we may continue to see larger banks outperforming their mid and smaller private banks. However, MFI could remain a weak spot for many banks. So that segment is yet to recover from COVID-19 led lockdown that we saw in Q1. So we have ICICI Securities estimates which suggest that SBI's NII is up about 2% YOY, while profit will grow about 53% YOY. HDFC Bank's NII is expected to be up 11% YOY, while profit growth to be around 20% YOY. Kotak Bank will see an NII growth of just 1% YOY and profits will be down 20% YOY. And for Axis Bank, they estimate NII up 8% YOY, while net profit to be up 94% YOY. Back to you.
Okay, all right. Thanks very much for that, Abhishek. Let's very quickly take this to Kunal Shah, who tracks the BFSI at ICICI Securities. Kunal, thank you for joining in. Okay, first things first, tell us in the banks, who will spring the most pleasant surprise? Mute, Kunal. You have to unmute yourself.
Yeah, morning, Surabhi. So, in banks, we will see leading banks taking a lead in terms of the quarterly performance. SBI, Axis, HDFC Bank, Kotak, it's going to be relatively resilient. And I think we have the business update numbers in terms of the growth momentum. So there is some regained growth momentum, though it's gradual, and it also seems to be in pockets. But looking at the growth momentum, again, HDFC Bank has reported, say, 5% sequential growth and getting towards more than 15% year-on-year growth. And I think the other banks which have caught up the pace includes IndusInd, Yes, and all in terms of the sequential growth. So I believe in terms of the positive surprises or maybe in line with the expectations, that would be more or less with the leading banks.
Okay. So what would your top picks be in the banking space now? I'm asking both in terms of growth as well as valuation, comfort. What would your pecking order look like?
So our pecking order is Axis, SBI and HDFC Bank, both in terms of the visibility on their operating performance as well as valuations. So when we look at SBI and Axis in particular, they are still trading relatively at cheaper valuations. And I think HDFC clearly, again, this quarter we could see around about 20% kind of earnings growth. So this three continues to be the peak in the banking space.
Okay. Just a quick last word on insurance and asset managers as well. If you could just run us through the sort of broad expectations that you have and the stocks that you like here.
So sure. Insurance and AMC I won't be able to cover, yeah.
Okay, okay, fair enough. So let me just ask you about the smaller names. Over Q1, obviously the stress was more visible in the tier 2, tier 3, of course, the MFI segments and the lenders to those segments. Are you expecting a lot of improvement here? Because the Q2 updates have been fairly promising for most, including even Bandhan, where collections have picked up.
So when we look at the product verticals, very clearly on the housing financiers side, it has been very swift in terms of the recovery, both with respect to collections as well as with respect to disbursements. When we look at it, vehicle financiers in several sub-segments, there is an uptick, but there are few segments which are dragging. And MFI is the one wherein I think recovery is gradual, and it would like most of the other product segments. So if I have to look at maybe outside of the leading banks and NBFCs, the smaller ones, in fact, affordable housing financiers are relatively smaller in size. We will see a good sequential uptick in terms of the disbursements as well as collections for them. And even say with some of the smaller vehicle financiers, you could see some kind of an uptick. And say like Bandhan has also posted their business updates wherein the collection efficiency, even though it has inched up, it's still dragging the pre-COVID averages, and the growth momentum was also relatively slow for Bandhan. So we'll have to watch out in terms of the earnings. And amongst these smaller banks, Federal and City Union, that is the one which we like in this space.
Okay, all right, we'll leave it at that, Kunal. Thanks a lot for joining us and helping us prep for the moment for the Q2. But for now, it's really the auto space that is dominating all the mind space right now. Tata